Hello, everyone. Thank you for joining us again. I have the privilege of having a special guest today, a friend and a banker that I've worked with for 6 or 7 years. Is that about right, Deems?
Yeah, but over 7 now.
Over 7 years. Deems is a commercial banker for Bank of Colorado right in Loveland, Johnstown. And many people might be surprised that a hard money lender like me and the investor source actually has a banker. Well, we have actually a number of bankers and a lot of synergies about having a banker and someone, even I need to go out and get money too. So Deems has been a great help to me personally and investor source. I have used Deems for that 7 years ago. I was kind of out there without having a bank to lend to me on properties that I owned, and Deems kind of took me under his wing. So I'm very appreciative of the relationship we've had since then and up to this day. We do a lot of business together. So without further ado, I'd like to introduce Deems Hargleroad, Vice President of Business Lending at Bank of Colorado. And Deems, yeah, say hi, and why don't you give us a little bit of your background and what you're currently doing in your role at Bank of Colorado.
Absolutely. Well, first of all, thanks so much for the opportunity to talk. And it's great to have. I've really enjoyed the partnership that we've had over the last 7+ years. My background, I'm banking for me is a second career. I originally started out as an IT recruiter. In the late 90s, and then migrated into banking in the early 2000s. Moved out to Fort Collins in 2005 and worked for First National for 3 years and then US Bank for 6 prior to coming to Bank of Colorado. So Bank of Colorado has been a great fit for me in terms of being able to really serve my customers in the way that I want to, and employing that community bank model. I have built up a portfolio basically from scratch here, and really work in a wide variety of ways. So working with a lot of businesses for kind of their expansion, very real estate focused in what we do. Kind of owner occupied real estate is a big piece of what I do, but also investor real estate is also another really big piece of what I do. I've formed some pretty good niches in working with reverse 1031s. That's been a fun area, and just a wide variety of investment real estate, and also do a little bit of consumer lending as well too. We have the options to do both. So I'll do HELOCs. We have a portfolio loan product here, which has worked out really well. Especially, it's been a great alternative to a lot of people who don't want to go through the normal kind of bureaucratic hoops of doing a 30-year mortgage, especially if you're self-employed. Sometimes people don't fit very well in that box. So, the way we underwrite provides a great, easier alternative, I think, compared to that process.
Cool. Yeah, and Deems has helped me not only with my getting lines of credit on my rental properties, which surprisingly, even with a lot of equity, a lot of banks just won't do that. I had a hard time finding one. Deems has also helped me with my getting money on equity in my primary residence and directing me, if he hasn't done the loan, he's directed me to people within Bank of Colorado who have been able to do that for me. So that's been a great help. So thanks. Why don't you tell us, Deems, a little bit about we're in a very turbulent market right now. What are conditions like in the bank for investors looking for financing from traditional sources like Bank of Colorado? Have things tightened up? Have they loosened because you're trying to get more business? Give us the scoop now. What's going on in commercial lending right now?
Yeah, that is a great question. I think at Bank of Colorado, we like to kind of say that, our lending standards are the same whether times are good or bad. And I know that's a little tongue in cheek, but it's really true in the sense of, our lending philosophy doesn't really change. This was kind of prior to me coming here, but the recession that happened, kind of starting in 2009 was really good for Bank of Colorado, and it was really good at the bank I was at prior. where, there were other banks who were kind of kicking people out right and left, and, kind of our appetite of lending never changed. We still just kind of did deals that still made sense. And so, I would say that, you're seeing some really interesting situations pop up now. And I think that every investor, certainly kind of tries to take advantage of whatever the economy is putting out. So for example, I'm dealing with people right now who are looking at properties where values are already going down because they feel like it's still going to be a good opportunity where, if the property's values go down, and you still have the rental rates that you can still attain, or those are still going to be strong, especially maybe say in a short-term rental scenario, that makes it good. I think one of the issues that we've had with investment real estate, especially if it involves any type of single family home, is just that the prices were just so high that it just really made it harder to justify. So that's a big piece right now, is where people are just trying to make those things work. A lot of other investment real estate has kind of gone down with the rates being a little bit higher. It makes it hard. One of the things we have to do from a cash flow from an underwriting standpoint, is ensure that whatever property it is that we're underwriting to can support itself on its own. So, we don't, and again, that's not always a rule 100% of the time. If someone has really good, strong liquidity or some other reasons why it doesn't cash flow unto itself, we just want to make sure we understand that. But obviously, most investors don't want to buy a property that's not going to support itself. You don't want to, unless you have a really good reason to do that. So, so I mean, we're definitely still doing lots of different loans. We're still very busy, but you see kind of different things happening for different reasons, and people kind of operating in some very different ways. But yeah, it's been an interesting year for sure, where there's just a lot of kind of people acting in different ways. But I think people still feeling good. And obviously, if you're a strong investor, those are, you kind of look for the best opportunities that are happening, whether it's maybe say a softening in prices, or is it still worthwhile for me to pay a little bit of a higher interest rate to attain what I'm trying to do? So we still see lots of activities going within that. And I would say, just from a general underwriting standpoint, liquidity is something that's really important to us. I mean, secondary sources of repayment are really critical. So, so say, for example, if there's a loan where maybe on a project basis, it doesn't cash flow as well, if that borrower has other good, strong cash flow, or, strong liquidity, that really helps us out. I mean, we really look for strong liquidity is that's your get out of jail free card for a lot of scenarios. And so, and I'd say that that's true, especially liquidity becomes even more important in times where there's some economic turndown. And so what's interesting is that, especially over the last 2 years, we've had a lot of people who, have put a lot of their funds in the stock market, maybe in some other types of assets, which is certainly understandable because the rate of return was much higher than what a bank was paying. However, now, we're kind of looking at that in a different way, where, and certainly I think a lot of people are saying, hey, look, this, I have a lot of money in the stock market, but all of a sudden now it's, decreased by 20% or whatever, whatever happens on that day. Yeah. So, I think we kind of look at that in a little differently when we're, if something's in an FDIC insured type of, and, we're, that certainly probably provides us a little bit more security than saying, hey, look, I've got, a certain amount of my assets in a total market index fund, which has gone down quite a bit. So, we kind of look to see, hey, what are the changes, what is that portfolio? And of course, there's people who have money in investments, but they're perhaps a little more conservative. Maybe, some funds that don't go up and down. So we just kind of look at those, on a very individual basis to kind of know, hey, what are those changes that have happened, or how are you adjusting that? Because again, those sources of repayment are really, really important.
Right. And so I'm hearing from you, I think just like us, you're making loans. We haven't seen a big slowdown or any really of a slowdown now with our investor clients. I'm kind of hearing the same thing from you. I'm not hearing that you're incredibly tightening up your underwriting standards, but just being vigilant that the reserves are there and the liquidity is there to make sure that loans are going to be successful, just like we all as lenders try to do.
Correct. And I think that, I think the other important end is I think we certainly are looking at appraised values a little closer than what we did before. And knowing kind of, hey, what are people purchasing them for? What kind of appraisals are they? Kind of the length of time that an appraisal is out there might be, a little different. If an appraisal was done 18 months ago, we might give that a little less value than if it was done 2 months ago, just based upon those values. And so that'll be really interesting to see kind of what's happening with appraisal values here coming up, and how the appraisers are kind of taking to see if those values kind of come in a different way, or they take a different approach. I think in the last, kind of prior to kind of the recent events of this year, I don't think anybody had any concerns about values really going down. And now obviously that's a bigger end. So it'll be interesting to see what happens with those appraised values. I don't know if this will be the case, but, in certain circumstances, we may want, kind of a lower loan to value just for to be a little more conservative sometimes if there's other weaknesses in the deal. But it's actually, and that's actually a good example, because values were going up so high. And of course, as bankers, that it makes us a little nervous when values go up in a higher timeline. So, our loan to value for HELOCs used to be 80%, and they went down to 70% because, again, we were just so worried about, a really rapid and aggressive valuation or increase in values that hadn't really happened before. So, so we certainly took a different approach on that once those were happening, just because we didn't want to get ourselves in a bad position of being, at a different loan to value if that was going to be correcting ourselves. So that's probably one of the bigger things that I'm going to be looking at, I'd say, in the next, for the remainder of this year and probably into next year is what are those values going to look like? And hopefully in Colorado, we're not going to have a major decrease, but some of your investors probably have seen, places like Arizona. I think that's a great example where, we're already seeing some values go down pretty significantly, pretty fast. But again, those create good opportunities though too, but we just, kind of make sure that we're structuring it to take advantage of that opportunity, but also kind of, preparing for other contingencies as well.
Right. Yep. I think we have it pretty good here in Colorado as far as values. I think we're seeing some softening, but no real deep plunges yet. And if we had more time, we could get into our prognostications of what's going to happen in the market.
Yes,
but
well, if you look at it from a historical standpoint, certainly Colorado, from a value standpoint, fared much better than, I would say, probably fared better than any other market in the country in terms of not having the same deep valuation, issues that a place like Arizona or Florida or California had. So that's good. I think our only worry is just that all of a sudden now we started to see, a lot of different kind of things that were more similar to a California in the last end. But yeah, no, I mean, I think the bones of the Colorado market are so much stronger than so many other places. And there's lots of reasons why for that. We have lower property taxes, at least on the residential side, not on the commercial side. And it's just will always be a very desirable place for people to be, and still is. So I feel that we've got a lot of good things going within us that a lot of other markets don't have.
That's right. And people keep coming. That's going to keep fueling demand.
Exactly.
So here, let's get into kind of the $1 million question of this discussion interview. Some people might be surprised that I have a traditional bank lender with me and asking, isn't that competition for you? So I want to pose that question to you, Deems, do you look at hard money lenders like me, even though I'm a client, do you look at us as competitors? And even if so, do you also see that there are synergies of an investor having both a traditional lender like yourself and a hard money lender like me as tools in their toolbox to help grow their real estate portfolios?
No, yeah, I mean, I think that's a great question. I think that no, I don't really view you as a competitor within that end because I mean, let's be honest, the way you underwrite and when someone comes to you, they're coming to you for very different reasons. And oftentimes I'm going to guess that if they've probably already gone to a bank and probably didn't get an answer that they were looking to hear. So, there's lots of great synergies that we've had. And obviously we've passed many deals back and forth to each other as time's gone on because, it's really not even apples and oranges, but apples and celery is probably a better analogy within that. The way that you underwrite is so much better in some ways because of what you can do, because you're not tied into FDIC rules and banking rules that we have to adhere to based upon the fact that our assets are, FDIC insured. So, our money, while our rates are probably going to be much lower than yours are, and our fees are going to be lower, our box is so much more narrower of what we can do, so there's so many great opportunities where you can help out a customer. And so that's kind of, my goal oftentimes. And of course, your sweet spot is you don't want to hold on to a loan for 20 years. I do, you want to kind of, do a shorter term loan, get paid off and then redeploy that capital. And so, that's really one of our main synergies that I've always kind of found is that if there's something that can be done where you can get that project up and running and stabilized, that's a great win-win. And there's lots of reasons why customers aren't bankable to us based upon maybe a specific project where we just don't have that historical income, where we can't go off of projections or what that's going to look like. And really the other big thing at the end of the day is we are cash flow lenders, not collateral lenders. We don't really want to and neither do you necessarily want to own a piece of collateral, but for you, it's a much more realistic secondary source of repayment for you if that doesn't come. And so obviously we can't look at it in that same way. So for you, you can look at it in so many different ends, and certainly your rates are higher, but it's well deserved based upon the additional things that you're taking out into consideration. So yeah, no, I think we're I definitely do not view you as a competitor whatsoever, because it just obviously most customers, if they're knowledgeable within that end, are going to go with the bank if they can go with it. Now, that being said, I think you probably have some customers that are probably bankable within that end or doing it, but your process is faster. And again, I can't go around the fact of you have so much more flexibility to do that. And
right.
Time is money, and if that's well worth it to someone, then I think they're willing to do that. I know obviously a big niche of yours has been kind of the fix and flip end, where you can kind of do some things that we can't do, and that's well worth it. The cost of funds are well worth it if you can incorporate it into the other things of what you're doing. And if that means, being able to acquire a property faster or begin construction faster or do whatever it is that's going to get you to that end result in a faster way, and you already know that rate of return and you've already incorporated in what the cost of money is, that's kind of a no-brainer for people.
Yeah, right. So something like a fix and flip, a hard money lender like us can, get that done quicker. And there are banks that don't even look at anything that has a distressed element with it. I think Bank of Colorado does some loans like that. In fact, we're working with you right now. Maybe we can give some quick examples of ways that investors have used traditional lenders like you and hard money lenders on the same deal. We're
Absolutely.
doing one right now with a church in Loveland where you're going to be providing the bulk of the funding for the purchase and the rehab. And we came in and were able to provide the down payment money that's needed to close the loan. So that's
correct.
One way that an investor can use both of our services. The simplest one is just takeout loans. When we lend money to someone needs it quick for a a fix-up or construction, and they're going to hold on to the property, they're of course going to need a permanent financing lender. And I think Deems is one of the best in the business for that. And I refer a lot of clients over for getting their permanent financing from Deems and Bank of Colorado.
Yeah, Dave, that's a great example of where, you guys are able to provide such a great bridge to somebody, because, for us, if a project is not stabilized and, for whatever reason, we really need to look at that, whether it's just a much larger scope of a project than what they have, we really need to have kind of that project be stabilized. And for us to, even though we do construction lending, it's a very, it's something we don't really get super excited about if there's some other things on that end where it's just a bigger project and we really need to rely upon the cash flow of that project to make it work. So that's a great example of you guys being able to provide that point A to point B to where that handoff can be. And like you said, you guys don't really want to do long-term loans for 20 years, and that's what we do all day long. And that's kind of, we want to keep loans on the books on our end for a long period of time and have that rate of return. And for you, and certainly for the borrower, it doesn't make sense to have a long-term loan on your side, because they want to kind of get to that point A to point B and then move on to that next project, which hopefully, you're helping them out with that next one. So I think that's probably one of the best ways that I think we help each other out is getting that and from that end. And like I said before, banking, I love working in banking, and sometimes it drives me crazy because we have kind of rules that don't always, sometimes we always make the joke about logic in banking. Don't bring logic into the situation. It has nothing to do with banking. So we try to narrow that gap as best we can, but at the same time, our constraints are so much more than what Dave has. And so, it's really a neat, such a great gift that you provide to your borrowers, because, you really have helped. I know you have so many great stories of people who you've helped to really do that. And when, other people told them no, and I know you have a very good loyal following because of that.
Well, thank you. Yeah, it's kind of a blessing to us to be able to be creative to help people get the deals done that they need to get done. And then to have, again, a bank like you there to provide that permanent financing, like you just sent us over an assisted living potential facility that we can get the whole thing purchased and going, get it stabilized a bit, and then you can come in and provide permanent funding. I wish we could go on for another hour, Deems, but I think we're running out of time, and you have to get going too. So maybe I'll just give you last chance for a quick wrap up or anything else you'd want to add, and then we can, and much appreciated you being here.
Yeah, well, first of all, thanks so much for the opportunity. Obviously, I really value the partnership that we have. I think one of the best things about you and your company is that you take, a very different approach than some of your competitors do. You're working out for their best interest. You're ethical. You do the right thing. And in hard money lending, let's be honest, there are some bad guys that are out there who aren't really looking out for the customer's best intention. And so, that's really important to me when I make that handoff, that I'm not, handing off to someone who isn't looking out for the borrower's best intention. So above anything, that's the most important thing to me in terms of working with you, is that, we know that, you're out there doing the right thing for your customers. And you're not out there to be a quote predatory lender, and there's hard money lenders who want people to fail because they have ulterior motives in that end, and I really appreciate that you're not that way, and that helps that partnership work so much more, and so grateful for that.
And thank you for that plug, Deems, and I'll throw it right back at you. That it's great to have a banker that I can really trust and know is going to take care of the clients and always do what's best for the clients. So thank you for being here today. Great to talk to you as always, and very informative for our audience. We'd love to have you back on sometime, and we will put your contact information on the screen at the end of this presentation. And I do recommend 100% if you need permanent funding and a bank to work with. Deems and Bank of Colorado is a great choice. Thank you, everyone. Have a great day.
Thank you so much. Have a good day.
Thank you.